Hey everyone, happy Thursday, April 25th. It's about 10:40 a.m. on the West Coast, and it's time for another market update. Getting right into it, this week we got some new home sales data. March new home sales, there's these new builds, new construction. Came in really high, plus 8.8%. February was revised down, so if you do the math, it would be more like 5% down, but still much better than expectations. So let's take a closer look there. Up now year over year, 8.3%. The median sales price year over year is down a little bit. You might have seen some stuff on CNBC, stuff like that about that falling, but keep in mind the median home price has to do with the mix of homes being built by the new home builders. So basically, they've been building. If you take a close look at the data, they've been building more and more, lower price homes. So that's bringing the median sales price down for them. But that doesn't mean home prices are falling drastically. So just keep that in mind. But overall, good month for new home sales, which I know builders like. And, the more they churn out, the more housing will be available for people to buy and for, different realtors to sell. Taking a look at this next thing we got was March pending home sales. So again, so these were homes that went pending in the month of March, didn't finalize in the month of March, but went pending. So they're dealing with elevated rates, and those came in at plus 3.4% when it was only supposed to go up about 0.3%. Taking a closer look at that. And again, it's good to see with rates as high as they've been, it's good to see activity. And a lot of that has to do with, a bump up in inventory. The more houses that are available, obviously, the more they're going to sell. So that's good for people that are, out there looking for homes. The more there's out there, the more options they have, then we'll keep prices down a little bit more. But, like I said, it's good to see that with rates as high as they've been, in the month of March and in April, that, the people are still out there and staying active. Next thing we got was initial job claims came out today, job list claims today. Again, came in a really low number, 207,000. The expectation was 214,000. That broke a streak of about 3 straight weeks of 212,000, which is very unusual because this is a big report. It's just weird that the numbers would always come out so similar. But that's a story for another day. But again, a little bit lower than expected. Reason we got to keep an eye on this. Fed's keeping a close eye on this. These numbers often go into the BLS jobs report, which is where they get the unemployment number and things like that. So the stronger the job market looks, the less likely the Fed is to cut rates. Miscellaneous stuff. So we got the Q1 GDP came out today. It was supposed to come out about 2.5%. It only came out 1.6%. So on the surface, that looks like maybe it'll be good for the rates because, hey, the economy looks a little bit slower. So maybe the Fed will, look at cutting rates. But, if you took a closer look at it, the thing that the bond market really freaked out about this because there's a component of this that kind of estimates what PCE inflation is going to come out, which will come out tomorrow. And that had it coming out higher than expected. So today has not gone that well in the bond market and has bumped up rates a little bit. And then overall Q1 reports tend to be a little bit lower than the later quarters, so you kind of have to take everything in stride there. But again, looked on the surface, hey, maybe the economy's slowing down, but then the inflation number in there was quite high. Next thing we got, so average 30-year really jumped today because it's a drop below that 7.43 number from last week, jumped to 7.52 on the back of that PCE inflation number. And the reason that's important is because tomorrow that's coming out. So the market's, seeing that is kind of getting a head start on the negative reaction to, inflation staying elevated. The Fed seeing that, seeing the job market supposedly still strong, which we'll find out, on May 3rd. If that's still the case, which it looks like it might be, the Fed is basically pushing back any cuts they had planned to September. Earlier in this year, we were thinking March, then it was May, then it was June. Now the markets are really not, factoring in the first cut coming in until September. And, instead of 3 cuts, which, the markets were thinking, now the markets are only thinking about 1 cut this year. So drastic difference right there. That's maybe a half a point to over a half point, maybe a 3/4 of a point in the Fed fund rate, which affects a lot of things. Affects credit cards, affects auto loans, affects us and mortgage rates, things like that. So, not good news on the mortgage rate front, but good news on the activity front. Like I said, more houses being sold, more new homes being sold, more inventory out there. That's all good things. And keep in mind, rates coming down doesn't necessarily mean it's going to get cheaper for people because rates coming down means more competition, means more people out there, more offers, less chance you're going to get any sort of seller concession. And that, would elevate the price as well. So, basically, if you find a home you like and it works for you and you can afford the payment, you better get on it now, or else it might not be available, or else, when rates come down, maybe you're facing, a lot more competition, 20 more offers. So if anybody needs anything at all, don't hesitate to reach out. Otherwise, I hope everybody has a great week. Thanks a lot, guys.